What is going on, everybody? It is Sunday, June 2nd, and I want to come back with a complete update and how we are actually up quite a bit more than what I was going to be expected to be up this week on the small account. So with that being said, let's jump right into the video and get right into it.
I know I'm fine, but the money
Okay,
makes
guys, you guys saw the title of the video. It's, we're growing this account quite rapidly, actually, with being extremely conservative. And I think that's the main point here. I want to be able to show people, you don't risk a lot. You can play a great game, you can be the casino, and still make money without risking so much. So I've took a couple pictures here. So the number one thing I want to show you guys here is we have the old total. So these are screenshots because I don't want to show you guys my account numbers. Not that I don't trust you, I just don't trust you. But 15,250. The new total here that we have is looking better. We are popping up a couple $100 this week almost. So, or about $150. So that's good, right? I mean, those are great results. You can't complain about that whatsoever. Let's go ahead and make these bigger. That's where we're at right now. Now again, this does swing within $100 all the time due to the futures positions that we have on. Again, we still have 3. You can see them down here. We have them all here. We're doing pretty good right now. We're up to $133.25. That first one that we put on is doing much better. It's down to 75 days, of course. But again, we have insurance on all these. You can see the verticals in here and stuff like that. If you don't know, feel free to comment below and ask what these positions are, and I can show you either a video or I can work with you to showing you guys how exactly I'm hedging the portfolio just in case. So let's go back in here. So let's get rid of both these and let's look at the overall portfolio right now. So if you saw last week's, we got a few more shares of PTY. We're up to 250, which is a great thing. PTY, as you can see it right over here, this is more of my income fund. I've been buying this for years, since I was about 19, 20 years old, I believe. I sold a bunch of it up at the tops at around 20, right when I bought my house, and then I ended up actually just buying a lot more when it was around $12 back in 2020 and everything. And this one has done me extremely well if you look at the max, which of course I don't have on here. So you guys can look at the interval, max, daily, and we can even go to a weekly because it's going to be a while that it needs to go back to. And you guys can see that it's came down even lower. But again, I wasn't really buying down in the 9s and stuff. I was buying more in the 10s and 12s. I bought a lot more in the 12s than I did the 10s. I'm going to be full transparent. But I did sell some in the 20s as well. And then as it came back down, I have bought more shares. Again, this company just it's a closed-end fund, but this pays every single month, and it's done me very well, and it's been a big part of my portfolio for honestly quite a while. I'm not looking for that growth, I'm looking for that consistent income. So yes, it's going to be a big portion. It's not overweight in my portfolio. As you can see, I actually have quite a bit of equity in PTY, even here in the small account already. We're up like $100 and something. 97 right now, and yeah, I think we're getting buying power off of it. Now again, I'm not really looking for that. You guys can see I actually added a Centerpoint Energy share here. Again, not one that I'm gonna go all in on, but I actually sold a put on this one and already cashed it out. So I basically took the profits, bought a share of it. I'm perfectly fine with that. Southern Company is still running up. Coca-Cola, we're doing good. We're going to get more dividends in here every month. Land, O, PTY, those are going to be just small little earners. Again, you guys can see I don't have a lot in O just because I'm not a huge fan of the commercial real estate market right now and overall, but O isn't at a bad price. So again, it's one of those things that I think we need to just continue to watch, and it delivers every single month on the dividend, and I'm pretty good with this one. Again, it's nothing crazy, but it's lower than what it's been, so I'm just buying up some shares. Nothing crazy in these positions, guys. Same with land. I'm actually up on land plus the dividends, and again, I was buying down in the 12s. Why? Because I thought it was a good buy, and I thought it was pretty low for what it had been at. And land, guys, does do well over time. Not exactly this stock if you're looking at it, but over time, land goes up in value over time. So I do think we're going to see a little bit of a bounce. I'm not looking at this one to become a huge equity gainer for me. Again, I only got one share. I'm getting the dividends. I'm not really looking for that big one. I just want to see how this plays out long term. So I'm willing to throw a couple bucks at this one. Southern Company, obviously back up at new highs, doing absolutely fantastic. You see UCO, we have the energy sector here. So OXY, Oxy has actually been the reason. You guys can see I don't have any Oxy shares anymore. I got put them to last Friday, and then, no, 2 Fridays ago. Then last Friday, I've actually done very, very well on Pete. So basically what happened is here, I sold a 62. I sold a 61 is what happened. And then, no, that can't be possible. I'm sorry. I sold a 62, or I think I sold a 62. I owned it Monday. It popped up basically 75 cents. I sold it on the open, did pretty well. And again, that's why we get, that overall gain on it. Made some money, made like $75 plus all the premium collected. So, you're up over $100 and something just from this position right here. I could have done a covered call on it and I would be up more. I just felt, we got a big pop at the Monday morning open out of it, and I wanted to secure it. And then what I actually did was I sold another put on this one during the week, and I actually made like another $25 off of it just right there, because I sold like a 60, which was down here for next week, and it already cashed out at like 65% so of the premium collected. So I just went on ahead, took profits there. But the one thing, if you guys don't get anything out of this video, is we need to go and look. And this is something that I didn't realize not a lot of people understand after talking to more people. And I just want to go over this more. So you can go into companies' financials. This is going to give you the overall. Now, Oxy does have more debt than what some of the other companies, like let's add Chevron or an XOM to it. And then, let's go on ahead and add XOM here too, because I want to kind of show you guys how to compare these. So we'll look at Oxy first. And they do have some debts here, obviously. And this is one that I really like to look at, and I'm not sure all platforms have this. But gross profit, op expenses, of course, it takes people and things to make that company work. And then operating income, and then your net income. Operating income is really the big one, and then your net income, what you actually get. So I do actually like that one quite a bit. The dividend history is one of those that does worry about me a little bit with Oxy and their debt level, because it is slowly going up. But again, they took a hit in 2020 basically, and it carried over to 2021 like everybody did. And I know my head's in the way for down here, this revenue and stuff, but you guys can see that the debt is the big killer here. So I want to go over and I want to go look at Chevron, and again, very little debt compared to the others. You can look at these, their net income. They actually have non-operatable income and expenses actually good. They actually did good there, which is way better than Oxy on those. Your dividend history, again, I don't love how this plays out, but it is gaining, and I think that's something to really care about. The percentage, of course, is different, but their actually dividend per share payout is going up slowly, which you're going to absolutely love that. And then down here is another thing that you're looking at, is their debt isn't near as bad as what Oxy's is compared to their free cash flow and cash equivalents. And then XOM, you're going to see something very similar here. It continues to go up, and then I actually like theirs probably the best when it comes down to the debt versus the free cash flow and cash equivalents. That is something that I do look at. And then I want to go to statements. This is another thing. I go to annual. This is a big thing when you're looking at it, is net income. Are we going up or are we going down? This is something that I do on all of them. So Oxy, you guys can see again, 2020 killed them, and it did hurt. That's why. But 2022 did better. 2023 we took a little bit of a hit, but I think that's with the oil price fluctuation and everything. You only buy these companies, guys, if you guys think oil prices are going up. I think that's a major factor in these. And again, you have to really like that. Now again, you can go look at O. O is kind of the same thing, and then you go look at these. They got quite a bit of debt, but that is real estate. They use debt to leverage and continue to go up. And this I really don't like, to be 100% honest with you. And this does worry me some too, with an overall market when it comes down to commercial real estate that I don't love. But they do a lot of triple net leases. That does make me feel better about it. But again, this is really the one that, you can look at it and they are just a consistent company. And again, they got a lot of debt though too. And again, that's why when you look at XOM and stuff like that, it actually does look really good. If you want to see one that does extremely well, it is PLTR. Their financials, to me, it's just crazy how less overhead they have. You can see that the debt here looks amazing because there's basically none. 217 million, which is basically like nothing to them. I love this part. Now they do have a lot of operational expenses, which I don't love, but I think that that's going to get better as they get more efficient. And then right here, I love this part. I'm not going to lie to you guys. I mean, it has slowed a little bit quarterly, but they just got another big contract. This is amazing right here to me. Cash equivalents and cash flow compared to the debt is amazing to me. This is one that I am going to be looking. They jumped up again this week because of this big, and I'm sure it shows it here, their contract. Oh, actually it doesn't, but yeah, they got a big contract with the military. I do like this stock quite a bit. I'm actually just going to start selling puts on this. Hopefully I getting assigned around $20, and then I will run covered calls on this one. So this week, that is my game plan for this, is to actually get in so you guys can actually see. I'm going to add it over here. PLTR, I have made money on this stock before. You guys can see I was selling the 18s and doing extremely well for quite a while. So this is one that I think you're going to see become part of my portfolio pretty rapidly, actually, here soon. Again, I think it's cheap right now compared to what the financials are. And again, you guys got to look at financials to know where you're going. So with that being said, thank you guys all for watching this video, and I will see you guys in the next one.